Last week of March, and we are not even 1%, we're 0.83% up on the account. Um, let's go over the goals. So, first things first is the trades that we've taken this week. I think it's pretty safe to say that the majority of traders in the entire industry, not just trading futures, not just trading gold, price action has been absolute ass this entire month, especially with the geopolitics going around. So coming out in green for anybody is a big achievement. So well done for that. Now, for me, I'm not profitable. I'm not funded. I haven't passed challenges before. This is the first time that I'm really locking the frick in to do something and going in with a strategy, going in with a plan. Previous times that I've tried this, which is only one time before, and when I was actually managing a live account, was going into trades with somewhat of a plan and then dynamically managing it, which turns out that I'm self sabotaging myself. So this time round, we're doing it the right way, where I'm logging it so I can hold myself accountable and tell myself, I'm doing this for X plan and we're going to execute it like so. And we're not going to change it until we're out of the trade. You've got three outcomes. You've got to break even once you hit a risk off area. You've got a full take profit or you've got a full stop loss hit. You can't dynamically manage. Now, this week we dynamically managed, but we came out in the green. And there's not really so much I can do with that because you're still taking a win. The week summary is we're $839 up, which is 0.83% out of the 6% profit target that I need. That's 152.9 pips in the green. There was only one actual trade with proper risk, so that means the right contract size, the right lots, the right tick stop, and the right kind of levels that we're looking at getting into. Again, that actual trade was dynamically managed. We close out early on the trade, but it would have been a break-even outcome otherwise. So 0.8 up on the first week. Now the concerns for the new week and what we're looking at really pushing forward. First things first is we need to understand which new contract pair I'll be trading on TradingView, because it's been quite challenging for me to go onto TradingView and look at the contracts that we're looking at getting in. So the contract pair that we were trading was Gold J, which was a contract that expired for the 28th of March. Now we've got a rollover where the contract we're trading expires in, I think it's June 2026. But the only thing is, the problem that we have is you can see different contracts that we can trade have different pricings. Now, I don't really understand the full voodoo of this at all. The actual one that we'll be trading is this contract size from Comex, the broker Comex. The only problem with this is it's delayed by 10 minutes, which obviously I don't want, and you have to pay for real-time data, which I don't want to do right now because we're still in the challenge phase. I'd want to get funding first. So I now need to try and find the right instrument that I can trade that doesn't require a delay and that has an accurate price of ticks. Otherwise, the last resort is to change the instrument that I'm trading on my actual broker, which is Holla Prime, which again, it might have different spread markers. It might be more expensive. I don't know what else in terms of price action would it be different. But again, we're going to have to experiment with it. So tomorrow, when we come up for the new week, the priority is to look at these things and look at the instruments and understand what we're trading before we actually get into the markets and dip our toes. Now, we have to understand that the system is the only thing that will get me to profitability. Everyone needs to hear this, because when you go into the charts thinking that you know what your system does, sometimes in the back of your head when you're in the trade, you don't actually listen to yourself. And that's what people mess up on, is if you look at the bigger picture, every single time that I've actually followed my full system of, you've got 3 scenarios, you're using a 4-point checklist, you need to have that plan solidified before you enter the market and before you've executed into that trade. If you follow through with that, you will begin to realize that's the only time you'll ever get a green week. 100%. That's the only time you will ever get a green week. You've got to make sure you're only executing the A++ setups and you're only getting into the trade when you've had the plan set out before. That means you've got the current range. You know exactly where your targets are. You know exactly where your advantage point is. When price hits X point, you're going to go risk-free break even. When price hits a specific point, you can potentially trail your stop loss to secure profits and make it a paying position. So understand that the system is the only thing that will get me to profitability. We said it, there should be no slip-ups this next week. We really want to get the focus on getting a 6% return so we can pass this funded account. Risk 1% per trade. We've done this. The way I'm going to calculate it is by roughly, let's say if I've got a 250 pip stops or a 200 pip stops, we're going to just multiply that by X amount to get 1,000 because 1,000 is the risk. So if I'm risking 1%, which is 1,000, we divide it by the amount of ticks that we're risking. That will give you the amount of contract size that you realistically want to use. And the minimum setup is a 1 to 2, but remain logical about the levels and ranges. Don't just manipulate yourself by saying, oh, this isn't a 1 to 2, so we're going to change the target level to a level that's not logical in terms of price action behavior. So we've got to make sure that you're looking at a 1 to 2 that's actually validated. If you've got a trade idea that is a 1.67 risk to reward, you're not taking that because it's not the risk that you want to take. London session has opportunity, so let's not sleep on that. And so does early New York. So starting the trading session for me is more beneficial. That means the personal life that I have and the routine that I have outside of trading has to change. That means my gym routine. I'm moving it more into the weekend, so I have more rest days in the weekday, and I get more opportunities when I show up more on the charts. So those are my concerns for the new week. Now the priority, like I said, is the 6%. We need to get that. I'm not forcing it for next week, but we're definitely going to have as much opportunity. I'm creating as much opportunity as possible for me to be able to enter the markets, for me to be able to be on the charts and actually look at price action and analyze it correctly and vet for good, high quality validities. And that is that. So that is a wrap for the week. We had two trades this week. There wasn't anything on Monday that we wanted, but we came close to something. Tuesday, we did have a position and it was closed out because I didn't understand setting targets and stops. So we understood in this learning was 1 tick equals $1 with 1 contract. So now I'm trading with 5 contracts equals $5 is 1 tick. And then for Wednesday's position is the only one that we actually looked at was an A++ setup. We understood what we wanted. We had liquidity get grabbed. We had the current range identified. We had the mirror on price action, and we went into that trade. So as price action came up, you moved risk-free. And then once price action begun coming back down, we looked to trail our position on the lower time frame on the break of lows, which made sense. And price action eventually, once it rebroke the lows, I think I have a trade outcome screenshot. Yeah, there we go. Price action came back down after creating support, resistance here again, came all the way back down to break even, and that would have stopped you out of the trade with 0 pips of profit. So those were the 2 trades that we took on the week. Again, the progression bar is only at 14%. It's about a 0.83, 0.81% up on the first week, which is a positive sign when we're green. Again, like I said, with the current market conditions, it's quite hard to kind of find good return, but show up again, create as much opportunity as possible next week, and then we're going to be back. So I hope this provides some value to other traders out there, perhaps the ones even more successful than me that want to work on their psychology, that want to work on their risk management, that want to work on their discipline to showing up and actually creating good validations on the charts. This might be for you too. And that is a wrap for me. We'll come back and we'll see what the next week entails.